In this video, I'm going to show you step by step on what I have done and get funded in less than a week, and you can do it too. Firstly, I'll start by giving you top tips for you to get funded. Secondly, I'll go directly to my dashboard and show you each and every trade I have taken and all the statistics. Then after, I will go to the charts and I will show you analysis of each and every trade. I will show you the reason, exit points, why I closed a certain trade, losses, each and everything. So stay here, you're going to learn a lot of things. Firstly, before thinking about jumping to Profim, make sure you have traded your own personal accounts and make consistently performance. I can suggest not less than 3 months. And then what you have to understand is you can perform well into your personal accounts, but that doesn't guarantee a performance into a Profim account. And it is simply because into Profim accounts there is a set of rules, there is targets and more pressure compared to what is found, compared to pressure which is found into your personal accounts. So in this case, what is very important to consider after buying a challenge is don't get yourself into a lot of pressure, and don't focus on the target, don't focus on I have to make this on a certain duration. Focus on the process. Don't focus on think like I have to make 10%, I have to make 10k, I have to make 10%, 15%. Focus only on the process. And this means if you focus on I'm going to make 10k, I'm going to make 10%, what will happen is if you get your first trade or first few trades as a losing trades, what will happen is if you're thinking like I'm supposed to make 10%, now it will be 11%. If you take another loss, it will be 12%. If you take another loss, it will be 13%. So if you start with loss, the pressure will increase. But for our side, what we do is, even if we start with the losing trade, or even if we get the losing trade, every new trade, we treat it as a completely new risk. We don't think like we have a certain target to achieve. We don't think like we are now into bigger drawdown. Only what we think is making quality trades, making our A-list trades. That is all. Then secondly, you have to learn on how to control your emotions. Before getting into Profim, learn how to control your emotions. And in this case, what you have to understand is these Profims, they are designed for us to fail. So once you buy an account, you will have a lot of pressure. You will think like I'm missing an opportunity. You will think like I have to take bigger risk. You will think like a lot of things into the mind, and that is how it's supposed to be. That is how it is supposed to be. This is designed for traders to fail, and their failure is their success. So by saying this means there is a lot of things you can do to learn how to manage your emotions. And one of the biggest thing I can advise you is find a person who can guide you step by step on how you can manage your emotions. A person who is already able to manage his or her emotions. I say this simply because just giving you a line like manage your emotions, it will not make you able to manage emotions. You need more than that. And secondly, on the case of managing emotions, you should have your own rules. So for when it comes to my own rules, we have something we call reverse psychology. And reverse psychology, this means Profim target is 10%, I will set my own target. Profim daily loss is 6%, I will set my own daily loss. Profim daily loss, it is 4%, I will set my own daily loss. Profim maximum loss of all the time is 6% or 80% or 10%. I will set my own limits. So up to a point I evaluate limits of Profim. I have to evaluate my own limits first, which my difference between my own limit and Profim's limit are very, very far. And lastly, tip I can give you in this is know how to manage your account. Managing your account and managing risk is one of the very important things to consider. And when it comes to managing accounts and managing risk, there is a lot of things, a lot of noises into this space. Actually, managing your accounts, it can be according to your rules and principles, and also managing your accounts can be according to your plan. Managing your accounts can be according to your strategy. But when it comes to risk management, it doesn't matter which strategy are you using. It doesn't matter what is your plan. Risk management is risk management. And there's a lot of advices, a lot of noises. But what I can advise you when it comes to risk management is, firstly, you have to think in probabilistic way. So when it comes to about thinking in probabilistic way, you have to know your winning rate. You have to know what winning rate you have. As I said from the previously, you have already traded up for more than 3 months. So you have a statistical data which you have evaluated them before coming to Prof Film. So that means you know your winning rate. You know in a series of 100 trades, you know in a series of 30 trades, you know in a series of 10 trades, you have a tendency of winning, losing, and getting break-even of how many trades. So you have also to think about, you can have a very good winning rate, but you have to think about what is the probability of me having series of losses. And when thinking about having series of losses, don't think about those good months, those good weeks, those good years. Think about what is the probability of having losing streak or series of losses when I have a bad months or bad weeks or bad days. So that is how a real trader must think. And also there is these notions like you can take 1% of the capital as risky, or you can take 0.7 or 2%. For my side, I don't think if it is realistic. I will show you why into the screen right here. I don't think like risking 1%, 2%, 3% it is realistic when it comes to Prof Film. And I say Prof Film, not just the Prof Film. It cannot even be realistic even to your personal accounts. Simply because we have to value our personal accounts the same as how we value these Prof Film accounts. We must have our set of rules the same as how these Prof Films set the rules for us. So don't think about being controlled by Prof Film or any entity somewhere else. Think about controlling yourself on your own money as well as on the Prof Film. Example for our side, the same principles we use to trade our personal accounts are the same principles we use to trade Prof Film. Only the difference can be percentage you take risk and some few tweaks we have made to align with the environment which we are trading in. Another thing is focus on becoming an asset. Focus on becoming the best trader who can trade in any market condition, anytime, any kind of account, and be that person who can start over even today and still make it. And don't trade by lucky. Let's take an example on this case of MFF shutdown. Most people have lost their accounts. Just imagine the position of people who was just funded by lucky. It is very worst position. So for our side example, IFX members, we have lost a lot of accounts. Example just for ourselves, 60 accounts. And in just less than a month, we have been able to make 2 accounts back from different Prof Films. So that is the 2 powerful skills. You can start over even tomorrow and still being able to get funded and still being able to make phenomenal performance. Just invest in yourself and make sure you are the best version. Every day make sure you become the best version of yourself and the best trader. So let's see right here. Example right here, these are our winning rates. And then we have these statistics. This is just a simple mathematics. And also you have this possibility of getting series of losses. So let's take an example. You have a winning rate of 90. When you have a winning rate of 90, a probability of getting two losses is 45%. Probability of getting 3 losses, it is 6%. Probability of getting 4 losses, it is 5%. And there is no probability of getting 5, 6, 7, 8, or 9 losses when you have 90% winning rate. And when you have a winning rate of 80%, there is probability of getting 2 losses, 91% probability. Then 2 losses, there is probability of getting 2 losses, 91% chance of getting 2 losses. And then 37% chances of getting 3 losses, 9% chances of getting 4 losses, 2% chances of getting 5 losses in a row. Then there is no probability of getting 6, 7, 8, or 9 losses in a row. Then when we go to 80% winning rate, if you have 80% winning rate, there is probability of getting 100% probability of getting 2 losses in a row, but 80% probability in getting 3 losses in a row. Then again, 37% probability in getting 4 losses in a row, and 5% probability and 13% probability in getting 5 losses in a row, and 4% probability in getting 6 losses in a row, and 1% probability in getting 7 losses. And there is no probability of getting 9 or 8 losses in a row. So it is the same. You can screenshot this. You can have a look. You check on probability of getting this kind of losses, and then you look on the winning rate. Example, when looking on this 10% winning rate, you have 100% chances of having 2 losses in a row, 3 losses in a row, 4 losses in a row, 5 losses, 6, 7, 8, or 9 in a row. When you have 50%, you can look. You have 100% chance of getting 2 losses in a row. You have 100% chance of getting 3 losses in a row. 97% of getting 4 losses in a row. 83% of getting 5 losses in a row. 6% and 58% of getting 6 losses in a row. 35% of 7 losses, and you can check on all these data. So when a person tells you to take 1% risk per trade, what you have to know is if the maximum risk per day or maximum risk of all the time is 6% or even 8%, just know your winning rate must be above a certain level. Your winning rate must be above a certain percentage. Even if you take a decision of taking 2% risk per trade, just know your winning rate must be above a certain percentage. So even if you have a winning rate of 90%, still there is probability of taking 4 losses in a row. Even if it is low probability, but still there is that probability. So for a trader to have 90% winning rate, it is very, very rare. So if a person will tell you like you have to take 1% risk, at least you have to be into this group right here, either 80% or 90%. And when thinking about probability, don't think like in a series of 10 trades or 3 trades. Think in a probabilistic of 100 trades and above. So a person with 90 winning rate, that means out of 100 trades, he can win 90 trades. Out of 100 trades, when he have 80% winning rates, he can win 80 trades. So that is all. Where majority of traders, their winning rate is on this group right here. So before thinking about which percentage you are going to look or being convinced by somebody who tell you take 1% risk, just think about this first. But also, one of the very important things you have to think about is possibility of getting trades. So possibility of getting trades means you're going to trade how many trades per day. So we don't set a specific number of trades to take per day, but we know all that. Depending on which kind of trader you are, either swing trader or day trader or intraday or scalper, you can easily know which of getting a certain number of trades per day or per week. So you put all these things into consideration. If you are still novice or you don't have any idea about the prop firm, don't worry. Download IntelligenceFx app. It is available in Play Store as well as App Store. And we have written 2 strong articles explaining from the beginning what is prop firm, how they operate, risk involved in each and everything else you need to know about prop firm. So download it. In case of anything, reach us anytime. Firstly, starting right here on this prop firm dashboard, we look on each and every data. So we have overview, daily overview, then trade history, statistics, and notification. So right here we have this net profit or loss. So already attained, it is 10%, but I have attained 10.21. Then we have a currently liquid, which is this one. Then previous day balance, and then maximum loss of all the time, which it is actually a trailing loss level. It is actually 6% for this prop firm, and we have a daily loss, which it is 4%, and no maximum time. And then we have this high watermark, highest level reached by an account. And then right here we have this trading growth curve, where we have red line as an equity, then green line as a balance, and high watermark as in this gold line, gold color line. So this is the major things we have into first page. And then we go to daily overview. So here in daily overview we have daily returns. Actually the first day was Friday, so Friday return was like negative 0.126. This was nearly a break even. So I executed a trade and then went into my profits. I decided to take some partials, and after taking partial, it hit a stop loss. So it was like 0.126. Then the second day 3%, 2%, another day 5.9%, and then 11%. So this is all, and it is accumulated curve. It is in accumulation. Then again we go to this daily summary. On daily summary, here are the figures, dates, trades, lots, and everything right here as you see. Then we go to trade history, one of the most important parts, trading history. And here they have listed dates, opening price, closing time, closing price, either it is a buy or sell. Then you have this symbol traded, volume, and profit. So this is my trading history. This is my trading history, and second page is this one. This is my trading history. You can look at it very clear. You're going to see each and every trade analysis. Actually, look at it clear. You are going to see most of trades analysis, how and why I decided to take these trades, why I decided to close either profit or loss, and everything. So this is my trading history. Then we go to statistics. Here in statistics is one of the best parts, and here we have a best trade, which it is $2,187, and then you have a worst trade, which it is $157.19. Actually, this worst trade, it is simply because I take only 0.3% per trade as a risk, only 0.3%. And then number of trades, it is 28 trades, and total lots traded is 17 lots. And then here you have an average win of $311.92, and then average loss is just $74.76. And right here we have an average risk to reward ratio, which is $6.03. Then here we have average risk to reward ratio, which is 6.003. You will see it on my charts when doing analysis and showing you how I decided to take all these trades. and then here we go to expectance, which it is $182, and then we have a profit factor of 8. Right here you will see long analysis and instrument traded, and instrument analysis. Here you will see long and short analysis, instrument analysis, which are mostly GBPUSD, EURJPY, and AUDUSD. Then trading volume. Trading volume was highly on GBPUSD, NZDUSD, EURJPY, AUDUSD, and GBPCAD. You will see analysis of all these pairs. Why I decided to execute a trade and everything else. You will see analysis of all these pairs. So this is all. Actually, on the side of notification is just notifying me that I have received a new account, which it is live simulated account. After seeing all this into dashboard, now let's go to my chart, and I want to show you each and every trade, and that is all. But before going to the charts, what you're supposed to know is these charts are very, very important. These charts are very, very important, but one thing which is more important is how you manage your risk. How you manage your risk. What is the maximum risk you take per trade, and risk to reward ratio. What is risk to reward ratio averagely you take per trade? So for my side and all IntelligenceFx members, we are trading on rules-based approach. So we have criteria for each and every trade. We have a criteria like we know which kind of trades we are going to take, what the average risk to reward ratio on each and every trade you are going to take. So it can be a very nice setup, but if it doesn't qualify my criteria, I will not take it. And also about winning average or winning rates and all these things are the things which you are working on them technically. And one more thing is, most of people, they have a will to win, but it is not the will to win that matter. Rather, it is the will to prepare that win. I say this simply because you can have a very nice plan, thinking like, I'll take this as my maximum loss. I will take this as maximum risk per trade. I will trade maybe only 4 trades per day. That is my maximum. You will have a lot of plans, but when you go to the market, you get catched up by emotions, greed, fear, and you lose everything. So your intention is good, and we all know that you want to win, but you have to prepare that win. You have to know how can you overcome all these things. First, you have to understand why, and then it will be very easy to solve that how. And solving it by yourself can be very, very difficult. So just find a person who have already passed all these stages of emotions, greedy, fear, FOMO, will help you and assist you in this. So that is all. Then let's go to trading view so that I can show you all these trades. Here on trading view, by starting the first trade here, I'll explain to you. It is EURJPY. On GBPUSD, I have this EURJPY. EURJPY is one of the pair. I shared it into a community today. This one, I shared it to a community early today. So what I see is, in the JPY basket, we are looking for a bullish counter trend to continue with more downtrend. So on this EURJPY, the same, just and vice versa. I'm looking into a bearish counter trend, but knowing that long term we into a bullish move. So how was it? It is very, very simple. Starting from the daily time frame, we know currently price is into an uptrend with a series of highs and higher lows. So let's concentrate on this recently one. Here it is low, then high, low, high, low, high. So probably this can be our low, but not limited, simply because this is just an intrastructure. So price can come even up to this level or even this one, and still price being into a bullish move as a long-term move. But then again, when we come to this daily time frame, we have a diminution. So this diminution is what made us become very confidently taking this opportunity, but it was a risky trade. Then we go to low time frame, like 4-hour time frame. Right here, you have another diminution, this one. So I'm still holding, but we can get another correction up to this level and it's still being into a downtrend. That is all what I see recently on EURJPY. But again, sorry, just one more thing is, on this 4-hour time frame, it was very, very clear, simply because here we have the starting of the trend, and then I have marked the series of highs and lows of the higher time frame via red, but of the counter trend via this is green. So here the starting of the trend. Then I have a lower low, then lower high, right here I have a lower low, then this is lower high, right here I have a lower low, then this is lower high, and you have a break of a structure with a test of diminution. So it is very, very possible we can create a higher low before our long-term movements. And EURJPY, it was a short position, and this short position was well explained into weekly market breakdown, but also it was shared into the community. I shared it into the community, and it was actually very simple. The main trend, it is an uptrend. We shared this into the community as well as into the weekly market breakdown, and he was looking for just a counter trend. When we say the main trend, it is a bullish trend, we mean this. When going into higher time frame, like weekly time frame, our trend, it is a bullish trend. Very, very strong bullish trend originated from this currently bullish trend originated from these levels, and then you have been getting this series of higher highs and higher lows. So when concentrating with this recently price action, we see here we have a price reaction to indicate that buyers are currently very, very strong into the market. So whenever we are looking for a position which is bearish opportunity, we should know it will be very, very short term. We should know it will be very, very short term, see, because buyers are very strong into the market. So when going into time frame like daily time frame, dealing with this mostly recently market condition, we see right here we have higher high, higher low, then higher high, higher low, higher high, higher low, then higher high, higher low, and then we have created a new higher high. So even entire this movement is just part of the correction, so that you can create series of more highs. And then I explained this into weekly market breakdown, saying that this pair have a characteristics of creating internal structures, and we respect all these internal structures. Example, right here we had this starting of the trend, then this was just an internal structure, so because it was formed even before formation of new high. Then again, here we had this level right here, which is higher high, higher low. Then you had this internal structure which was formed before formation of new higher high. Then you had this higher high, higher low, higher high, higher low. Then again you had this internal structure which was formed before formation of new higher high. Then right here we have this higher high, higher low. Then you have this internal structure. So this internal structure looks to be powerful from the previous market trends. And I say this simply because each and every pair have its own behavior. For those IntelligenceFx members, they understand you have a topic called behavior of pairs, explaining behavior of each and every pair, but also showing on how you can identify behavior on a certain pair at a specific period of time. So because all these behaviors are also changing at the market change, but also at IntelligenceFx we always share each and every behavior once it is spotted into the market, so that everyone can be aware of. So when looking for this bearish opportunity, this level of infrastructure, which it is actually diminishing into the low time frame, it was one of the point of concentration. And the main reason why it is one of the point of concentration, it is simply because we also have these price reactions, 2 times price reaction. So that is all. Then when going into this most recently price action, where we found our selling opportunity, it was this simple. We created this higher low, then higher high, and then we got this movement up to this psychological price level, and then we created a lower high, and then this was lower low. So this was just a movement to create a new high, and in some of the time frame, this was actually a true lower low. We'll see into low time frame. When we go to time frame like 12 hours, actually this time frame like 12 hours, 9 hours, 6 hours, 45 minutes, a time frame which majority of traders, they don't look up. But these are very, very important time frames. These are very, very important time frames. So on this 12 hours time frame, or can say starting from this 12 hours time frame and below, I will start concentrating much on this recently trend. So here it was the starting of the trend. Actually, I have marked this yellow marks to indicate the main trend, but also I have marked these green marks to indicate this counter trend move. So right here we had this starting of the counter trend, and then we create the lower low, then lower high, then a lower low. Then this one was not a true high, rather it was just a part of the correction. So entire this movement was just a single move. You can learn also in your course on how to differentiate single move, double moves, and all these things. So this was just a correction. Then it reacted on this level right here, which you have a very nice reason. And then after reacting on this level, it is where we started looking for a trade and started looking for just a confirmation after reacting on this level. So we got the break of this infrastructure right here, and then after having a break of this infrastructure, we didn't break a trend to just confirm that we are into counter trend and not a main trend. So I went into more low time frame, and here it is 9 hours time frame, where it was also very, very clear, having series of lows. As you see, I've marked all these lows. Then when going to 6 hours time frame, structure was also very, very clear. As you see here, we had this price reaction, we had this break of structure, which you know majority of traders are looking to take a trade on this break of structures. But for us, we have to be different and take take a different approach. So we created this series of lower low. After having this impulse, we knew that it's the other phase of the trend. So started to look for correction move and asking ourselves on where will be the ending of this correction move, so that we can take that impulsive phase before continuing with long-term trend. Then going into 4-hour time frame, it was very simple. We had this diminution right here, and then price reaction to indicate that sellers are currently about taking over into the market. And then not enough, we got this some sort of accumulation right here. It is well seen into the low time frame. So we decided to look for an opportunity on this recently markets. And right here it is 1:6.68, nearly 1:7. So this was one of the best trade for this week. And when going into more low time frame, here we have this kind of price action. Here we have this kind of price action. Here we have this starting of this correction, then higher high, higher low. Then we got this higher high, higher low. Then this is just small structure. Then this is higher high, higher low. And then you got this bullish candlestick right here, which made up inverted diminution. So which made up inverted diminution. So after having inverted diminution, and I have already executed my first entry on this level, I started looking for the second entry, which I also explained it into market breakdown, live market analysis this week. So we got this very nice correction, and then I executed the second position. You will see into my screenshot a second position right here. So after having this second position, we got a very nice movement. And when it comes to management, it was very simple. We created a lower low. This was just a movement to create lower high, lower low, lower high, then lower low. Even this one, I predicted that the market will come to this level, but I didn't want to put all eggs into the same basket, especially to this account, which it is a prop firm account. I said to this account because we are trading different accounts, personal accounts, different prop firm accounts. That is all. And then we got this lower low, lower high, and then lower low. But the issue is why I decided to close these trades. And on the time of analysis, we had different views. Actually, all was selling views and on the same level, but we were thinking like it is also possible for price to come up to this level. This is just part of the infrastructure and still being bullish. But after reaching on this level, I decided to close it. And the reason is here into the low time frame. Actually, after reaching on this point of concentration, we got this lower low, lower high, lower low, and then break. So after having this candle closure was a clear message, but also into more low time frame, we had this kind of price action which give us diminution. So from my side, after having this kind of diminution, it is in our point of concentration and also aligns with the price reaction. I decided to take action. And also when going into this 30 minutes time frame as well as 20 minutes time frame, as we have the same thing, it is very clear we had a very nice diminution, very nice break of structure with a test, not just the break of structure, with a test. So after having this test, I decided just to close the full position. That is all about execution, management, and everything on EURJPY. Then after, we go to gold. If you have looked into dashboard right here, the best trade was gold. So I will explain it deep down from higher time frame to low time frame. I explain each and everything in very simple way so that even those who are non-members, they can understand. Members, they know we can go very deep when explaining one concept after another, and it can be confusion for those who are non-members simply because they have not learned all these approach and all this. They have not learned all these approaches and all these things on our courses, so it can be somehow difficult to understand. So I will go into light details as much as possible.
Okay, now let me keep going on so fast so that I cannot take a lot of time because you're having the same views. It's just a different perspective of where and how am I looking onto the charts. So firstly, as I say, I was viewing my first pair actually was gold today. It was activated very fast, and I was not able to send it to the community because the time it was activated, it was already a lot of pips away from the entry. And it was due to these 2 hours break of structures. I was looking for a selling position. As you can see, my alarm, it was this way up. This was my minor area of concentration due to that it was 2 hours time frame. I mean, lower time frame, we can call it. And we had 2 hours break of structure. After that, it just went to more low time frame, and I saw it on 15 from 30 minutes. You had this break of structure which was activated, and then you can see we're having this move, which I'm expecting due to my higher time frame perspectives that I'm not expecting currently a very long term move after. Until then we create a new low from this point, and this point there is when I'll expect a very long term move that this correction phase is still going down because we've been having series of low high, low, and then after creating a low, that's when we can call it low high. But currently we can end up even to this point and create.
Starting from this weekly time frame, though on our analysis we start from 12 hours time to 12 months. Starting from this weekly time frame, though on the time of analysis we started it from 12 months time frame. I just want to go so fast as much as possible, and here we have a price reaction. First price reaction, after reaching on this highest price level on gold. Then we had the second price reaction to indicate that you have reached a certain price level which have very high supply of liquidity. So this third test was musty. As we know, it is a magnetized level. So we have got the test of this diminution right here on these lows. Market is in ranging. We have not yet get higher high or lower low, but we know gold is in a very long-term bullish move. And then when making concentration with this most recently trend, simply because to the one which you find a trade, we see right here you have the starting of the trend, and then higher high, higher low, then higher high, higher low, then higher high, higher low, higher high, higher low, then higher high. Price reaction and all indication that we are going to a downtrend. So after having all these indications, you start looking for bearish move. All this time we have been looking for bearish opportunities. We have even some of the trades holding up to now. Then we go to low time frames. Example here, this is daily time frame. So in this daily time frame, as we are looking for continuation trade as part of this correction, we will concentrate much on this recently trend. And on this recently trend right here, we have the starting of the trend with the test of diminution, and then lower low, lower high, lower low, lower high, lower low, lower high, and then entire this movement is just a single move. As I said, you have to differentiate between single moves and this kind of moves. So entire this movement is just a single move, and then we got this as just a correction. And after having this correction, we got this impulsive phase to create a lower low. Not just a lower low, rather a true lower low. So after having this true lower low, we start looking for a point which will be an ending of our correction move. As we just knew this currently trend, it is going to end somewhere from the previous trend. So right here we got this correction up to this level, and then we started this downtrend, and then this was our first impulsive phase, and then correction. So right here we started by first very strong thing, having a price reaction. But for those who are non-members, you don't have to misconcept. There is difference between price reaction and the wicks. So you have to know how to identify wicks which gives a message, and all these price reactions. It is very potential thing. It is very potential and very important thing. So right here, after having a price reaction, it is where we started looking for confirmations into the low time frame. And it is in this way we went into 12 hours time frame, and on this 12 hours time frame after price reaction, you got this lower low, lower high, and then lower low. So we had this diminution right here, and we went into more low time frame to find more confirmation. And on this point, it is where also most of the traders go into the wrong direction of the market. As you see right here, we have this lower low, lower high, lower low, break of structure. So majority will start thinking like maybe you are going to test on these levels and you can start a bullish trend, and many other ideas can arise. So let me cut the price and show you this. Firstly, after having this impulsive move, we know what next will be a correction move. So after having this lower low, lower high, and then lower low, majority of people start looking for selling opportunity on these levels. Actually, it is not that wrong, but if you are skilled, you know that market is made up not of series of candles. I mean, if you are skilled, you know this. Market is made up by candles, and you interpret this all price action by using candlestick. Let me draw this. We interpret all this price action and market movement by using candlestick, and then after this candlestick make market structure, and then market structure make it trends. So when making consideration of taking opportunity, we don't start from candlestick to market. We don't start from candlestick to trends. Rather, we started from trends to candlestick. So if you take a decision based on this kind of candlestick right here, it is not a complete market structure, it is not a complete trend. So you can get into taking unnecessary losses. Actually, you all take losses, but some of the losses are unnecessary, and this kind of losses is what make your winning rate become very poor. So we got this kind of movement, and after having the break above, after having this break above right here, the same majority start looking for bullish opportunity on these levels, but it is actually a counter trend, very short-term counter trend, and then you continue with more bearish move. It is not bad to trade this kind of counter trend, but you have to be aware. You have to be aware that currently I'm trading counter trend, and it is very short-term trend. You have to be aware that currently I'm trading this counter trend right here, and it is just a short-term trend, and this will help you to have a good exit point. As I said from the previous video, having a nice entry, it is one thing, but you have to be profitable consistently. You have to be a nice to be profitable and consistently, and to master your strategy, you must have that nice exiting points, and all these things must be rules approach. I say rules based approach simply because we are all human beings. You can wake up with some emotions, you can wake up with greed, hungry, angry, or anything else. So if you are not making all these decisions based on rules, one day, if not today, if not tomorrow, but one day you'll make mistakes, and these mistakes can be very costful into your trading career. When going into more low time frame, here it is very simple. We had the break of structure, and we was also looking if the price can retrace back to these levels of domination. It haven't stayed back on this level, but if we understand the daily cycle, we can come back to this level later. So right here we got this as just a correction move and then an impasse. Then going to 6 hours time frame. 6 hours time frame, it is where we got our first confirmation of taking trade on this level right here, and it is a domination. So after having this domination and a very nice test of domination with a price reaction which gives us a magnetized level, it is where we decided to take selling opportunity. And this is why I say some of the time frames retail traders, they don't look up, but are very important time frames. Then we go to 6 hours time frame. Here almost each and everything the same. Then 3 hours time frame, where we found this domination, break of structure. So taking trade on this level, it was just a confirmation within confirmation within confirmation. Then here on 2 hours time frame, we have another domination. This one very clear. So just taking a trade on this level, like 21 pips, stop loss, and then we got the movement. Now we are here on this challenge. You have already closed this position, but on our other account it is still running, and on this account we closed it right here, nearly on these levels. I mean right here, nearly on these levels. It was like 1:28. So currently running 1:36. Very huge risk to reward ratio, 1:36. And I said when looking on dashboard, risk to reward ratio is what matters most. This is what can give you profitability so easily. Assume taking one trade 1:36, and then you are going to risk the same amount of percentage in your account. So even if it is 1%, you have to take 36 losses so that you can be into break even, which if you are a serious trader, this is not even possible. 36 losses, and even if it is possible, it can take too long. Even if it is possible, it can take too long. 36 losses, because even when we take 3 losses, we stay out of the market and refine and check on what we have to improve, read our mistakes and everything else. So taking 36 losses, it is nearly impossible, and this is how people become consistently and profitable. And then we go to another prayer. When it comes to management, this one was very simple. We was just waiting to create lower low, and after creation of lower low, we got this series of lower lows. So right here we had the test of this price reaction, and then we got another impressive phase. In case of management, this one was very straight. And then we go to USD. USD, I executed my entry on this level right here, and I have closed my position somewhere on these levels right here. So it was very, very simple, and it is in this way. It was in this very, very simple way. Firstly, we know this currently trend. We know this currently trend. It is on downtrend. So we have this series of lows, as how I explained even in previous videos. So lower low, lower high, lower low, correction to create lower high, lower low, lower high, true lower low, lower high, true lower low, lower high. Then entire this movement which we are in currently, it is just a single move to create lower low. It is just a single move to create a lower low. So after knowing that this movement is just a single move to create lower low, we just come close and look on the details. So right here into this weekly time frame, we have this level right here, which it is a level of domination. This one, it is the level of domination. So we marked it, and we know the main trend, it is downtrend, but when reaching on this level, we must get a counter trends. Then going to 3 days time frame. In 3 days time frame, we had the second level of concentration, which it is also domination. So we marked it and waiting to see how the price will react when you approach on these levels. Then again, right here on this most recently price action, we had this lower low, lower high, and then lower low. So we know we are into the area of concentration, but in case we get a confirmation, we can find a very nice selling opportunity. Then we go to daily time frame. Daily time frame, it was very, very clear. Here breaking of the entire trend to create a lower low, and then we created the lower low, then lower high, and then lower low again. Then we had this price reaction. So I explained this into the weekly market breakdown, that we can get a test of this price reaction and not the actual test of this price reaction, rather on the level of domination into the low time frame, but taking the trade into these infrastructures as just a counter trends. So let's go to low time frame. Low time frame, right here we had this price reaction, impressive move, test of domination right here, and then this infrastructure. So after having this infrastructure and it creates a lower low, it is where I started looking for selling opportunity. Actually, all these decisions are based on a certain kind of rules which you have set into our way of approach. So we go to 9 hours time frame, and here in 9 hours, very simple, you had this domination which was not tested. Then you had this test of domination from right here, and then we got an impressive phase. So we went to 6 hours time frame. On 6 hours time frame, we found this domination, and on 6 hours time frame, it was the reason for this trade. This 6 hours time frame, it was the reason for this trade. So a very nice test of domination, and you got a very nice movement. So when going into time frame like 4 hours, it was just an addition. This 4 hours helped me to set just my stop loss, as stop loss is supposed to be above level of domination. So it is above, it was like 7.5 pips, and we got this impressive phase. It was very, very nice trades. And on the weekly market breakdown, we will see, I said we are looking for selling opportunities here in between, but price still can come up to this level of domination and still continue to be into the downtrend. So that is why I named this as just a counter trend, and looking for taking profit here in between, looking for the message on the markets. And how I decided to take profit it is very, very simple. Let's go to low time frame so I can show you. Here is this 45 minutes time frame. We tested on our level of concentration. This one, as I have shown you, into the higher time frame, and then 45 minutes time frame we had this test of domination. We all know when we get test of domination, it is very, very strong thing into the market. So it is nice indication for reversal. On this account, I didn't execute this trade simply because it was already past this. So just close the trade and then looking to see what next, and maybe looking to see what next, and looking on growing other accounts. So that is all, and I closed in somewhere on these levels after having this bullish candle. So it was around 1:67, nearly 1:7. That is all on AUD/USD. Then we jump into this NZDUSD. NZDUSD again, it was one of the best pair this week with two nice trades. So it is all about simplicity, accuracy, and consistency. Starting as usual from these higher time frames so that you can see the trend. Actually, we first start by these edges of the trend where we all have price reaction, but also concentrating much with this recently trend. Here it is lower low, lower high. Lower low, correction to create lower high. Lower low, lower high. Low, high, low. This is just an infrastructure, and then lower low. So entire this movement was just a correction to create a lower high. Then currently into this movement to create a lower low. But market is not moving in a straight line. So we got an impulsive phase, we got this correction. Impulsive phase, and currently we are into correction. So currently into correction, so you can proceed with more downside movement. Then you have this level of concentration right here. That is all into the higher time frame. When going to time frame like daily time frame, it was very, very clear. Actually, we are coming from testing a price reaction, and you have this level of validation. So it was confirmation within confirmation. Then another thing into this daily time frame, as I said, I explain in very simple language or simple way. Here we have this price reaction, and it is originated from domination. So it magnetized the price, and then we got the candle closure above. After having this candle closure reacting on this level, it was a clean indication that we are going into bullish movement, that we are going into that counter trend bullish move. And then when going into this 12 hours time frame, right here we have this breakout of structure which was formed after creation of lower low. So I explained this into the previous video. Most of the traders, they really like to trade this pattern. They really like to trade this pattern, breakout of structure, which it is also very nice. But what you have to know is there are some of the counter trends like this you will not be able to trade. I said this into the previous video. There are counter trends like this you will not be able to trade simply because you will wait to trade the breakout of structure. Then we are coming from just finalizing this part of the correction. We are going to create a new high. So when pro traders are out, it is where you exit your trades, and you can get stop loss hit, and this is also what we call unnecessary losses. So in this case, what we do is we find position even before a breakout of structure. So after breaking the structure, it's either we are already taking some partials, or even we are out of the trades, like how we did on this trade right here. That is all. Then we go to 9 hours time frame. Here 9 hours time frame, it was very, very clear. This was looking to be a correction move with a valid series of higher highs. Right here you see higher starting of the trend, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, so higher high. Entire this movement was just the move to create a higher low that you can continue creating series of more highs. As our currently trend, it is a bullish trend. Then we go to 6 hours time frame, and 6 hours time frame was very, very clear, very, very clear. Series of highs and lows, this counter trend, pro trend, everything is clear. Then we go to 4 hours time frame. Here in 4 hour time frame, everything was also clear again. We got up to this level of concentration, price reaction, not just one price reaction, 2 price reaction. And then we went into 3 hours time frame, where we found this diminution, which was tested by a price reaction. First test, second test, we executed our trades. So we got a very nice movement. This trade was shared into the community, was well discussed into live market analysis on this week. Live market analysis for community members as well as live trading room members. So after having this first entry into this level of diminution, which also aligns with the break-off of structures, just a minor reason, we have got a first impulsive phase. So after having a first impulsive phase, we started looking for second entry, and it was very simple into the low time frame. Started looking for second entry into the low time frame. It was actually on this level right here. We got this lower low, lower high, lower low, lower high, lower low, price diminution. So we executed on this level as just our first test. Actually was looking to add if the price will come back to this level, but missed the very few pips. So that is all. And when looking on this 20 minutes time frame, price action is more clear. We executed a trade, first one on these levels, second one right here. So impulsive phase correction, series of impulse and correction, and after coming back to this level of concentration, we got this movement. Actually, this movement is typically looking like just a normal correction, but it is not a normal one. If you see all these previous corrections, they don't have this market nature right here. So it is different one, but we didn't wanted to make a quick decision. So we waited for a price to react on these structures as well as level of diminution, and we got this counter trend. So what we was looking at that time, it was a counter trend to create lower low. So in case we fail to create lower low and it creates a higher high, it will not be a counter trend again. It will not be a correction. So we created a new higher high, and not just new higher high of this current trend, rather a high above this level of diminution and a high above this validation price level. So for that fact, we executed this trade on we closed all these trades on this level. After reaching on this level, we take partials. After reaching on this level, we closed all these trades. And factor of closing these trades was not just price action. It was not just a price action. And issue of taking partials, issue of taking partials on this level, it was not just a price action, rather our rules and the principles. So we reached on 1:5 right here, and on this kind of trades, counter trends, at 1:5 we take partials. So after having a clear message on the market, we closed full of the position. This was one of the best to trade this week. One of the best. We traded a new trend, so a new 20 minutes trend. So that is all. Then after we go to GBPUSD. GBPUSD is one of the potential swing we traded on this account. One of the potential trade we traded on this account, and it is not actually one, it is 2 trades. So here it is our 4-hour view, and when going into weekly time frame, this is our chart into the weekly time frame. Market into the downtrend, series of lower lows, and then having a very nice move to come and test on these levels of validation. A person can think like, why you have not tested here, you have come direct to this level. It is simply because of exceptional higher time frame. So that is all. Then here you have this currently trend where you have higher high, higher low, higher high, then this is the movement. So this is not the trend which you concentrate much on, simply because the main trend, it is the downtrend. So we go into low time frames. When coming to time frame like daily time frame, we all know that this currently trend, it is downtrend. And I always say currently or previously because we have decisions which we made depending on the current trend, but also we have decisions which we made depending on the previous trend. So when it comes to this case, we concentrate much on this currently one. And right here you have this lower low, lower high. As you see, I always mark a series of the market trend. So here you had this lower low, lower high with a very nice test on a certain price level, and then I just knew we entered an impulsive phase. I was looking for a way to join this impulsive phase into the low time frame. So right here we had this bullish candle. I just knew it is a retracement. We had this level of domination. I just knew it will not come back into this level of domination due to low time frame market structures. So coming up to this level, as you see, very, very clear, minor price reaction. And then here we had this domination right here. You had this domination to indicate that you have taken a trade on these levels. Confirmation and then trade executed. And when it comes to management, it is very, very simple. Simply, this is just the basic market structure. Lower low, lower high, lower low, lower high, lower low, series of lows. And after reaching on this level of concentration, we got this reversal pattern. Accumulation, we got this reversal pattern, accumulation. At the same time, we got domination and test of domination. So after having all this into the same place, we decided just to take it to close our trades, But also, my second position was on this level right here. I executed another position on these levels right here. So it was just a movement of few pips. After having this kind of message, you closed all these trades, and then it was the starting of the new counter trend of this 1 hour time frame. So this is all about GBPUSD. Then we go to GBPCAD. GBPCAD is also one of the very nice pair this week. In GBPCAD, from my side, it is very, very clear we have been into a very strong bearish move. Very, very strong bearish move. And this strong bearish move with a characteristics of just having a very small pullbacks. Just a very, very small pullback. So what I see recently, you have this break of a structure. Very simple, just having a correction. Then we keep creating a series of more lows. I'm very confidently about this one, though I will take the same risk as how we planned, but I'm very confidently simply because the market nature, pair behavior, the main trend, it is all aligned. So that is all. Then the morning, and we explained this pair into market breakdown, and even I shared it into the community. I shared into the community when the price was on these levels right here. So it was very, very simple. Starting from, let's start this one from two weeks time frame. Starting from this 2 weeks time frame, price is in the downtrend, making series of lower lows, lower low, lower high, lower low, lower high, accumulation, lower low. So after having this distribution, it is always still looking for a counter trend, and it is a bullish counter trend. You know, this time have been looking for this counter trend. So after having this counter trend, reaching to our potential areas, having a confirmation, we change the mind and start looking for bearish moves. So right here you see how these levels of concentration, and then we can go to low time frame and see the trend. On this page, I decided to come to this 2 weeks time frame simply because you have this message right here on these levels. Then we go to daily time frame. Here in daily time frame, price was very, very clear, coming from shifting the direction of this currently trend, failure to make a new higher high, and then very strong movement. Then I went into low time frame. When I say went into low time frame, that means not straight to 4 hour, rather passing through 12 hours, 9 hours, 6 hours, all these time frames. So here you had this very nice break of structure, some sort of a price reaction, and I predicted another price reaction on this recently trend. Then when going into time frame like 2 hour, which is the time frame I shared the chart with, and it was time frame which I got my entry, we have a very nice diminution. And after having this diminution, I decided to set my entry on this level. Executed, well movement. So lower low, lower high, lower low, lower high, lower low. I executed, take partial profits, and then I was looking, after taking partial profit, I was looking for retracement, thinking that we can go to more series of lower lows, maybe up to this level right here. So I went into more low time frame, and here it is this one hour time frame. When coming back to this level, I executed another trade, which it was actually a losing trade. So taking partial like 80% of the profits on this first entry, and then after taking losing trade on this level right here, and break even on that remaining 20%. That is all about GBPCAD. And again, we have USDJPY. We have this USDJPY. USDJPY was actually a losing trade, and this is one of the losing. This is the losing trade I will explain into this video. And why I have decided to explain this one, it is simply because this is the trade which I have lost, and giving me that full loss of 0.3%, which I'm always taking. 0.3%, which I'm always taking. And this is my roasted trade into this account. And it is this simple, as you see right here. Roasted trade 157.19. And when we go to trade history, when you find a trade with 157.19, it is this one. USDJPY at opening price, this one 148.13,000, and it closed on this level right here. Difference of this, I mean like 13 pips. Difference of like 13 pips. So that is all. So when explaining this USDJPY, I also explained it weekly market breakdown, that our main trend, it is still an uptrend, but it was just looking for a counter trend. We were thinking like we can have a correction up to this level so that we can continue with more bullish move. But what happened is we came to test on single price level and create the new higher high. Then we can see into this 3 hours time frame. It was very clear. I executed my trade on this level right here. So stop loss. 2 hours time frame, it was this level right here, almost hitting everything the same. So again, majority of traders, after taking losses, they can start thinking like, let me find a trade so that I can make my profits back. Or let me look on correcting my mistakes and take a trade back on the same pair. But for my side, after taking a loss on this level right here, I decided just to come down and wait to see how new structure will get formed. So after having this new higher high right here, I just predicted that we can have a higher low, and then you can keep creating series of more highs. So this is all. It was a confirmation trade, but again it is losing trade. But one more thing is, I always journal, and in my journal I was trying to look on what I can do better into this kind of scenario. If you don't know what scenario is this, it is we have got a higher high, higher low, higher high, break of structure, and then higher high, break of structure again, and then you have created a new high. I mean this. We have got higher high, higher low, higher high, break of structure, then higher high, break of structure again. So I decided to look on how can I deal with this kind of scenario in the near future, when I get it into maybe the same pair or even a different pair. So I have documented each and everything, and I'm very sure I will not repeat to take this kind of a trade. It is not that I will not take loss again. No, each and every trader can take losses, as we are all human beings. We all make mistakes, but by understanding this scenario and each and every case scenario which make you take loss, and practicing that scenario into different pairs, it can make you avoid a lot of unnecessary losses. And that is all what I'm trying to say. Not just a losing trade, but also I was having this EURJPY, which EURJPY it is trade I missed. So if you miss a trade, don't become too much emotional and trying to find maybe a trade to replace or joining the trend and all these things. Just stay calm. Even us, we miss trades. So this one was my setup, and price was not triggered, and it was having a pending order which was missed by very few pips. So price went more than 60 pips and then reversed it. So I didn't execute this trade. After having just this movement, I decided just to delete that pending order. That is all what I have into this EURJPY. And again, last thing is, we have looked into different pairs, but mainly it was USD pairs as well as JPY pairs. So what we always do is, we always make correlation, USD with DXY, but also JPY pairs with JPY basket. So right here, I always consider these pairs. Starting with DXY, I was looking at it as into a very strong bullish move. So as we know, we're into a very strong bullish move. I will look bearish moves as just a counter trend, and bullish moves as moves of the main trend. So I was making correlation, which it is negatively correlation with XXX USD, but also positively correlation with USD XXX. So then again, we have JPY basket, and on this JPY basket, I was making correlation with all JPY pairs. So example, when it comes to case of EURJPY, which it was one of my best trade this week, I was looking like on JPY basket, we are into this correction, and then this correction can correct up to this level. It is level of 9 hours, and then after reaching to this level, we can get a lower low. So it was the same on EURJPY. So it is the same. EURJPY is it is negatively correlated with JPY basket. So when looking for this bullish correction on EURJPY, we know it will be into a bearish counter trend. So we take advantage of that, and even after reaching on this level on JPY basket, triggering my alarm, which it is on this level right here on JPY basket, I decided to look on EURJPY. You have reached at which level, so that I can make decisions, simply because we know that they are negatively correlated. So if you check on this counter trend right here, it is the same, but just an opposite direction into this counter trend right here. And when starting this bullish movement, it is when we started this bearish move. You can go at your own time and make follow up on all these moves. But also another thing is, we have rated articles about currency pair correlation, about time frames. All these time frames which I'm talking about, I have explained them, why, which time frame is not included and why, which time frame we don't look at it and why, and everything else. It is in IntelligenceFx app. Everything is into IntelligenceFx app, and not just into IntelligenceFx app, for free, completely free. You don't have to pay anything to access these articles. So you can go and check article of currency pair correlation, article of what is prop firm, how to choose a prop firm, and everything else. But also you can go and check articles about trading plan and a lot of topics. Just download IntelligenceFx app, FX app. It is available on Play Store. Just download IntelligenceFx app. It is available in Play Store as well as in App Store. So see you. You're most welcome. In case you read those articles or materials which are available into our application and you get any question or anything else, feel free to contact us. Just go in profile section and then contact. You can contact us on WhatsApp, Telegram, or any platform you like. So thank you so much. I hope you enjoyed this one. If you find this video useful and insightful, make sure you like, comment, and subscribe as more videos are coming. But also you can access more videos like this into our application called IntelligenceFx app. It is available for free into an App Store as well as in Play Store. So download it, enjoy a lot of content, and upgrade anytime to access our live training room or our courses, which comes with weekly market breakdown, midweek market breakdown, every week trade recaps, and daily market breakdown. Ready to take your trading career to the next level? Don't miss this one. Thanks.